Hey guys, welcome to another trading routine session. A bit later today. This will be the morning routine session. Typically I am done with my analysis till 6 a.m. So a bit later today was preparing the recording. Okay, if you guys knew what I'm doing here, I just actually show you the trading setups that I'm looking at. I show you how I place the trade, how I execute the trade, how I manage the trade, how I do find the swings, how I do find the patterns, all that technical stuff that is needed for successful trading, as well as I explain some aspects of psychology of trading and money management. So I talk about everything that one may need for successful trading in Forex. That's it. Okay, don't waste our time. Let's start doing our analysis. I just drew those swings on my market, and after that I draw the pattern. So if you are not familiar with this swing identification technique, you are welcome to visit my YouTube channel. Just click on my name below this video and you will be headed here to my YouTube channel, and type in the section in that search box type the secret. Come on, the secret. Okay, here's the video. It is 24-minute tutorial on how to draw swings according to high highs, high low principles, and low 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 principles as well. This is based on Charles Dow theory, and it is pretty simple, absolutely simple. You only need to watch this video and practice a bit, and you are done within 2 days maybe. How to professionally draw the swings according to my way, according to the way that I draw them. And the rest that is needed, you need to calculate the ratios between those swings, and you can do it several ways. You can use the Fibonacci's, stretching the highs towards the lows, swing high to swing low. You can use those pattern tools, swing high to swing low. You can also see the ratios here, like this, and you can use my software as well. So there are many ways to draw those patterns that I'm looking at. I am actually trading advanced patterns. If you don't know what ratios I'm looking at, you are welcome to visit my website www.ps-software.net. Here's my website. Click that Learn the Patterns tab and choose between Gartley Advanced Formation, Bad Advanced Formation, Butterfly Advanced Formation, Cypher Advanced Formation. These four are the patterns that I'm trading in these videos. So you also have the Gartley harmonic pattern, bad harmonic pattern, and blah 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 other patterns that I also trade outside of those videos. But within these videos approach, I am only using advanced formation, advanced formation, advanced formation. So let's continue. Once we know the rules, let's click on one of them just to get it. Not only you have the diagram with the most commonly ratios, you also have the identification rules. You will be explained what tools you need and what tactics you need. So criteria number 1, criteria number 2, criteria number 3. Not only standard ratios, but also some variations that are most commonly traded variations here, and no variation within the D point of Gartley advanced formation. You can see the variation, and also you will be given the trade execution rules, how to execute rules. The main problem is that most guys are interested in this identification rules and they aren't interested in the trade execution rules, and that's the problem, because they go in connection, in junction. If you only take one part and you discard the second part, well, that's not good, you will fail. Okay, and also we have the trade management rule. The trade management rules is very important. The target adjustment and the closing half of position and break even the rest. So it looks pretty simple. The strategy was simplified, especially if we compare that strategy with harmonic trading approach that is much more complicated because it is much more conservative way. We don't place limit orders. We are looking for some reversal price action within the potential reversal zone. We don't set the predefined stop loss. We are calculating that stop loss after the terminal bar has appeared, after we have that price action. Then we calculate that stop loss according to our target levels. We calculate the risk to reward and blah 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 blah. Typically we have the maximum level that will invalidate the pattern, but we place the stop loss in different places each time, every time. Okay, so then next, okay, we know the rules, learn those by heart, and if you know them, you will perform the same type of analysis that I do. Very simple. The only thing that you need to practice that patterns, so your eye grasp those patterns in the blink of an eye. So in order not to measure every swing, it is very time consuming. You need to practice and practice. So it looks pretty simple, and it is indeed is simple. It is very simple, easy routine. Okay, nothing here. Euro yen, Euro Aussie, nothing here. Maybe potential cipher pattern, no cipher pattern. Euro New Zealand, nothing here. Euro Canadian, it is the trade that I have set yesterday. Euro Canadian, here it is. It looks this way. Look how I find my patterns. I just click on C and click on X, and the pattern is drawn with the entry with the 90% CD level completion with the recommended stop loss. It's not mandatory to place this stop loss. This stop loss means that the pattern is invalidating as soon as price exceeds 1414, and I just added few pips to that 1414 to make sure that I have the stop loss. Actually, it is the distance between my first target and my stop loss, they are equal. I'm using the rule of equality. Let me stretch the fibs back. Okay, once the pattern is triggered, once the trade is triggered, let's suppose we have price moving lower and crossing my limit order. Once the trade is triggered, what happens? If it exceeds lower and lower and lower, the targets needs to be restretched, and the targets needs to be adjusted. New 61A, you can see new 61A, you can see new 382, and so on and so forth. So I'm not doing it manually. Pattern Trade Assistant does. I can sleep at this time. Pattern Trade Assistant will adjust them as new high, new low appears, new low appears. So next, if price returns and hits the first target, and the first trade is closed, so the stop loss is moved to break even absolutely automatically as well. So, and I only left the second trade. Pattern Trade Assistant is free if manual HPS, automatic HPS, or Monster Pattern Search is purchased. So this is the combination that helps you to execute trade and manage trade. It goes in combination. So you don't do the two missing parts manually. Not only identification, but execution and management. This way you will perform the expert analysis. It seems to me we've broke the... No, we don't. Hey, come on, pound dollar. We broke the lows. Pound yen going next. Pound Aussie. Pretty fast. When you know what to look at, it is pretty fast. The patterns are jumping in front of you. They jump to your eyes. Pound New Zealand. Do I have this pattern in my MetaTrader? Pound New Zealand. Yes, it looks this way. Let me draw it. Sorry, it moved. X, A, B to C. So the magnet mode is applied here, and the lattice and those triangles coincide exactly with highs and lows. because of that magnet mode. I already have this trade. Going next, pound Canadian. Interesting price action here. Let me do it this way. Now I will tell you what I'm looking at. This high, this one, the most recent lower high was violated and turns into a higher high. So that's why we draw a swing to the upside. Okay, this low breaks the most recent higher low, going lower. This high breaks the most recent lower high, going this way. This low, maybe it breaks this low, so let's see that. Okay, 65.27.6 and 27.6, it equals to that, like this. I draw, when they equal, I draw it. It is the minimum requirement, equals or less, equals or more. Then we obviously break the most recent lower high, and then we obviously break the most recent higher low of this, and then we obviously break the most recent lower high of this. Instead of, we'll have a higher high. So this is the swing identification, kind of consolidation on this pair. Okay, most recent lower high is here, most recent lower low is here. Either we should have a lower low or we should have a higher high, one of these two. But before that we still consolidate within this range, and it may take for years, for weeks, not years. Breaking higher, breaking lower. This is the price action. You see how easy you can identify those head and shoulders patterns, those swing patterns. There are triangles, pennants, whatever. You can see them very, very easy. Let me see if we have a pattern here. You can see that two movements followed by this breakout, a potential cipher pattern. No, the ratios don't fit the criteria. Go in here, Aussie, New Zealand. Let me see, potential cipher pattern. No, this close is very high, the candle close. Okay, so this is the Gartley that I was looking for yesterday, and it didn't trigger. So we have the following price action. The Gartley is not needed anymore. Okay, Aussie Canadian. Here's the trades from my MetaTrader. Yes, I have deleted that already. Going next to New Zealand dollar, the most recent higher low is here, higher high is here. Until then, we break in the middle. Same. New Zealand Canadian. Maybe we get lower. Dollar yen, we move this way. Nothing wrong with this pattern, it is still valid until we go here to the D point or we break the A point. Higher high, you can see that, lower low, and another higher high. So just look at this previous lower high, and now we'll have a new higher high. Okay, so this looks like forming letter M. Letter M is forming, and it brings us a pattern. X to A to B to C to D. It is a potential bat pattern. Dollar Canadian. Let's go. USD Canadian. Oh, I have it this way. Dollar Canadian. Open the chart window. I have a sell on this position already based on 4 hour maybe, and it is a buy. a sell and a buy. Well, let me hedge it based on 1 hour. Let me hedge it like this. It is a very small trade, nothing wrong with that. I don't have too many trades running right now. So in some period of time I will have 2 positions running at the same time, but this one is very small and it may hit the targets or it may hit the stop losses, and it does not anyhow influences the another position. Just imagine you have the 2 different charts, one of them running this and another running that, or you may have 2 different accounts. 24.41.8, 24.41.8. Okay, 24.54.0, 24.54.0, 54.0. Done. So here's the magic. Oh, let me check it. The settings aren't correct. Okay, so I am to apply the default settings. Default. Okay, done. What I am to do, I am to redraw this butterfly pattern. Here it is. I am to redraw this bat pattern. Here it is. Okay, and I am to stretch the fibs. 24.54.0. 40. Done. 24.41.8. 24.41.8. Done. Okay, so you should think of that. Either you need to hedge or you don't need to hedge. If it is logical or not logical. A trade inside of other trade. It is very small trade if compared to the previous trade. You can see that the stop loss distance is this. Boom. And the take profit distance is that and that. So it doesn't negotiate this trade. If it were another way, maybe so the take profit of this trade coincides with the take profit of that trade, so it will be equal. Then it gives you nothing because you have a loss on one trade and the profit. Sorry, if the take profit of this trade coincides with the stop loss of that trade, then it will be equal because they coincide. But here we have nothing. This is very small trade within the larger trade. So this is my beliefs, my philosophy. Okay, done. The only thing here that you may use extra margin here, extra margin. And if your broker only allows you the margin 1 to 50, then maybe you won't be allowed to have that many trades at the same time. Okay, $42 risk, target 1, $46, target 2 is $78. If it never completes and goes higher, then be that. For now, it is good. It seems good to me. Okay, dollar Canadian. This is the trade from dollar Canadian. Going next. Lines, Canadian yen. Okay, the pattern is still valid and the trade is still on. Canadian yen. Here is the pattern. I am waiting for it to go high and trigger my entries. Done. Let's go next. Dollar Canadian 1 hour should be deleted here. Let's go next. It is the 4-hour layout. We need to save this. Okay, And let's start doing analysis on 4 hour. Euro dollar, we have a running butterfly formation. It should hit the targets, target 2 or stop loss. Until then, nothing. Okay, it was saved. Euro yen, nothing here. Euro Aussie. Look at this, and now we broke the most recent lower high and have a higher high. I am to redraw this pattern. Look at a new one. This pattern looks this way. 77, oh, 55. No, it should first go to somewhere more than 618. It is a potential Gartley pattern, because the B point is the differentiation point. If it is 786, then it is a butterfly. 77 is a Gartley. 618 is a Gartley as well. 50 is a bat. Euro New Zealand. It was my yesterday trade. We hit target 1 and then we came back to the entry, hit break even, so the trade finished. But we have it this way. This trade is not finished yet. We didn't have it. It is a butterfly pattern slightly exceeding the X point. Okay, the Euro New Zealand trade. Open the chart window, 4 hour. Go in here. The butterfly pattern is connecting this low for the C point and this high for X point. No, not this high. One more to the left. The swing tells me that it should be one more to the left. You see, when you draw incorrect swings, you don't have any patterns. So I am to set my Fibonacci's 73.340. Oh, 65.340. Sorry, 340. Looking at some other numbers. 66.833. 83.3. Done. Limit order. Okay, 152 pips. If you're using fixed position size, it may be a very large stop for you. 152 pips. For me, it doesn't matter what size the stop is, because I'm using the same percentage. If the pattern is small, I'm risking $40. If the pattern is large, I'm risking $40 as well. So it doesn't matter for me. Let's go next. Euro Canadian. Potential cipher formation. No, the B point is too small. Yes, pound dollar. Broke the low. Okay, done. Pound yen. Okay, here to here. Hello, message. Somebody is writing me messages. What is it? Puskin. Hi Alex, please can you help me with possible entries for the pound New Zealand you analyze? Thanks and nice to meet you. Okay, learn the patterns. Backtest the patterns. Copy. What is that? Copy the link. Learn the patterns. Control V. Learn the patterns. Okay, hope the link is okay. Why it is typing in caps? Maybe it was broken caps. Capital letters, they are large letters. Okay, next, pound CHF, nothing. Aussie dollar, nothing. We have the break to the downside. Aussie yen. Oh, we move lower. Let me see what happens with my trade on Aussie yen. We didn't hit the target, and we go lower. Aussie New Zealand, nothing, at least for now. Aussie Canadian, okay, we move lower like this. We may have that butterfly completed, but now it is too early to set any trades. I don't trade from C to D, so, and I don't know if it is any beneficial of trading C to D, if it is of any benefit. Okay, we can have this trade or we can have this trade. X, A, B, and butterfly pattern. Which one is the lowest here? C to D. Bat pattern, not butterfly pattern. I have it set, maybe. New Zealand yen. Yes, it looks this way. New Zealand Canadian is the next trade that I'm looking at. If it goes lower, then the pattern will be triggered. New Zealand Canadian. I have it placed yesterday, nothing changed, so no need to replace the trade. What is this kind of consolidation period? Nothing here. Dollar Canadian. Look at this. Nothing here. This is the trade that I was talking about, the butterfly in dollar Canadian, and we have very small bat advanced formation. Whatever price action, whatever swing, small swing within that price action can bring us profits. The only thing is the additional margin, additional risk, and that depends on your risk management, depends on your risk appetites. If you feel good having the drawdowns of 15%, maybe 20%, maybe, then it's up to you. Okay, that's it. Want to see my performance? Why not? This is the video recording program. These are my files. Let me close that. Just wait until it loads. Okay, and then I close this. So the performance of my trading, here's the history, balance, $3 balance, $1 balance. What is those? Balance, withdrawals. Okay, so we need to do that. First of all, the period that I trade this strategy, it starts from the 21st of August. This is it. The only balance is 49 cents. It was given by my broker. It is called the 5% spread cashback, something like that, a bonus. So we need to sort them. Time. Yes. This is 510. Okay, so this is the last one. I just downloaded that from my broker's server. What I am to do, I am to save it without any modifications, the way the server provided this information, XLS, so no fake statements. Why I saved that in XLS format? To be opened in Excel. This is the only reason why I need to save that. Look at this. When we look at numbers, you will be amazed that numbers don't actually coincide with the backtesting. So I do it almost in each and every video, showing you how this should be performed, because I believe that objective evaluation of the strategy is the key to your confidence, to your trading. Here's my trading. Had some drawdowns, 40% maybe, 41, and then I draw here, and for I think for last 2 weeks I'm moving sideways. Okay, so if you look at my accuracy, profit trades, percent of total, 50%, that's not true. MetaTrader statement is fooling me. My broker calculations fooling me. Well, broker doesn't calculate anything. Broker provides the trades when they were opened, when they were closed, the price. The rest is calculated by MetaTrader. Okay, MetaTrader generates wrong numbers. Okay, average profit trade, average loss trade. That's not true as well. And why is it so? I will explain you in a second. So, what is the reason? What I'm talking about? Based on my back testing, I have about 60% accurate strategy. 58, 59, 50, 60, 61, 62, 3% more, 3% less. You will know all about that statistical error. That is 3%. So if I say around 60, it means that it is within the range of 57 to 63. Perfect. Okay, and the average profit trade, average loss trade. The strategy is useless if you have 90% accurate trades, but you generate 0.1 when you are risking 1. Yes? When you generate 10 times less. So the risk to reward, average risk to reward, is the key as well, the key element, accuracy and risk to reward. So we will calculate the risk to reward in pips. Today we will calculate in pips because I have generated many trades already, 180, and I have started $500, and before that I was risking $20. Now I am risking $40 because my account was doubled, and that's why my money values of the trade already changed. So it's not good anymore to calculate the positions, average winning position, average losing position, because before that I had $25, now I have $40, and I made a decision to calculate that in pips, to be because pips doesn't depend on the money average, depend on your position, if it makes sense to you. But earlier I've been calculating in dollars because my position stood almost the same. It was almost the same. Now it changed radically. Okay, so what's wrong with that? Maybe I'm doing something wrong. Why it doesn't coincide with my backtesting? No, I'm not doing something wrong. I'm not doing anything wrong. I'm doing anything very, very nice. Let me delete all of this. We don't need that. Yes. So you witness me deleting the stuffs. If you see that I am deleting something that may compromise me, you can say, hey, you are making fake statements because you have deleted this and you have deleted that. Okay, would you agree if I delete cancel trades like this? Let me first choose them, cancel trades. Yes, we don't need them as well for our calculations. Delete the rule. Okay, and look at those trades. Would you agree if I choose those trades that are zeros? These zero trades are actually very, very small losers, like this, 390. I never had a loss less than $7. I remember myself that my first trade was around $7 risk, so I never had it less. Okay, here, and small winners. 40 seems to be a take profit. Okay, so I call them zeros. Why they are zeros? They are actually the second part of my position, the second trade that didn't go to the second target, but it went back to entry, and that's why it ended up break even. It should be calculated as a winning trade. You see, the position consists of two trades. First trade hits the target one and closes the target one and break evens the second trade. Yes, overall I am profitable on the pattern, I'm profitable on the position, so they should not be calculated as negatives. Okay, sometimes that's because of slippage, that's because of that commission and the swap. You can see the swap, negative swap. Sometimes the slippage is positive, sometimes the slippage is negative. Would you agree if I delete this balance, this thing, the deposited funds from my broker, 5% cash back on spread? Okay, I only deleted that. And I suggest to do it this way. Let me turn them into slightly positive numbers, like this. So when we type our formulas of calculating them, it will be okay, done. It will be slightly positive. Perfect. Going back to disable filter. Now all those zeros, instead of negative, they are positive. But this number didn't change because it's not an Excel formula, it is a number. You see, we don't have formula here. It's not recalculated automatically, and we are to, in order to recalculate it automatically, we are to do it manually, not manually, half manually. And I will teach you how to code the Excel spreadsheets, and it will be very needed for you if you know how to code it, the Excel, to calculate your performance. Objective evaluation of your strategy. If you do exactly what you have done on your backtesting, and your backtesting shows positive expectancy, and you have generated tons of money paper trading, so you will generate tons of money real-time trading if you do exactly the same. The only challenge for you is to do exactly the same. This is the only challenge. Okay, let's start that. I would suggest this formula. If this more than 0, if this more than 0, then you can see the syntax help. So after the logic we should semicolon, and then we should value if true, value if false. Type the value if true. What if the value if true? We need this absolute ABS, absolute of price close minus price open. So if it is more than 0, so the price close minus price open should be always positive. That's why it is absolute. And if it is less than 0, else. So the second, if less than 0, if this is not true. If it is less than 0, we don't have equal 0 in this calculations because I made them all zeros turned into slightly positive. If it is less than 0, then it should be the same. ABS, Control C, Control V, but instead of this, it should be always negative. That's it. If the result is more than 0, then we should calculate the pips, and the amount of pips should be, the number of pips should be always positive. If the result is less than 0, that we should calculate the pips, and the amount of pips should be always negative. Down. Let me apply this. 2, 3, 4, 5 zeros. 5-digit broker, 5 zeros. Stretch this till the end, and the formula repeats itself in every cell. Done. Okay, perfect. Now we see the amount of pips. But guys, here the amount of pips with 5-digit pairs is pretty good. But what we have to do with 3-digit pairs? Yen pairs are 3-digit pairs. Let's do another calculation. We will turn them instead of double numbers to integer numbers. At least some double numbers that show not the that many signs after the dot. Okay, you will see what I mean in a sec. This equals if the items, the instrument that I'm trading equals, let's start Euro JPY. Perfect. If it equals to Euro JPY, then this should be multiplied 100. Agree? And we have a 3-digit thing. Now we should copy this. No, we should copy all. Control C. But what if it doesn't equal to Euro JPY? Then we should do another if. If it equals to GBP JPY, then do the same. Yes? But what if it doesn't equals to GBP JPY? Then do another check. Maybe it equals to Aussie JPY, AUD JPY. And if not, Control V, check another. Maybe it equals to NZD JPY. And if not, check another. Maybe it equals to CAD JPY. And if not, another. Maybe it equals to Swiss JPY. And if not, another. Maybe it equals to USD JPY. USD. Okay. Euro yen? No. Maybe pound yen? No. Maybe Aussie yen? No. Maybe New Zealand yen? No. Maybe Canadian yen? No. Maybe CHF yen? No. Maybe dollar yen? No. Okay, I don't have any pairs left, so what I am to do? In this way, I am to multiply it by 10,000, by 5 digits. Okay, I am to close all those brackets. Closing this, you see, this moves as well. Okay, this. So I had 1, 2, 3, 4, 5, 6, 7 ifs. I am to have 1, 2, 3, 4, 5, 6, 7 right brackets to close all my ifs. Let us see if the formula is correct. Yes, it is correct. So what this formula will do? Let's do it this way. Let's this number be double, not integer. It calculates that. Instead of 129 pips, as you might have think of this, you see it is yen pair, then it is 12.9. Okay, here you have what? 39.7. 39 means the 4-digit pips, and this is the decimal of pips if you have 5-digit broker. Blah 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 till the end. Unlock the power of XL. Ha ha ha. Yes, you need to become a programmer. You need to do that. You need to know how to evaluate your strategies, how to code the software. At least some basis of programming languages. If then. Okay, let's do the calculation. 180 trades. Let us find how many winners we have. Perfect. Okay, we need to apply the formula here. What the formula looks like? It should count if within this range of P column, you now see the P column. The first date is P2 and the last one is P, here it is, P181 is the last. P181. P181. Okay, what should you count within this range? You should count those that are more than 0. Perfect, done. Okay, the formula is set. Oh, sorry, not more than 0, more and equals to 0. We are just calculated pips. Sometimes pips were 0. We didn't change them into slightly positives. Sometimes pips were 0, so 109. Okay, the rest is simple. How I do calculate my accuracy? It is this. What I have, 1 divided by total. Perfect. 61%. Actually, it is 61%. 61.56. Okay, how do I know my losers? It equals this minus this. So what is not a winner is a loser. How do I know my accuracy of losers? How often I lose? It equals this 1 minus loser. Okay, turn it in percent. Done. So my strategy is both. Look at this. 60% of the time I have a winner, and 39% of the time I have a loser. It is both. If I don't have losers, this means I won't have winners. If I try to avoid my losers, this means that I'm trying to avoid my winners. So no matter what happens, no matter how large the drawdown is, if it stays within the numbers of backtesting plus minus 3%, then it is okay. Okay, average profit trade. To do that, we need this formula. Control C to copy. It is quick copy. And we need to paste it here into the cell. Control V. Look at this formula. It counts those trades that are more than 0 within this range. But this time we don't need to count them. This time we need to calculate average. Average if within this trade more than 0, and it will give us the average winner. Okay, let's calculate the average loser as well. Here, average loser. Control V, change this, less than 0. Perfect. Okay, 46 pips is the average winner, 41 pips is the average loser. And the average, the more trades you have, the better your average calculation, the more precise your average calculations are. The more precise your accuracy, the more precise your average calculation. 180 is not that large number. On my backtest, I have 11,000 of setups. So I know that during the course of my trading, the more trades I have here, the better they reflect the actual backtesting results. Okay, risk to reward equals, let it be here, average risk to reward. It equals average winner divided by average loser. But this case it will be negative. I don't want this to be negative. That's why I will only use the absolute meaning of this number. 1/12. 1.12. Format cells 1.13. 1.13. Okay, so I am winning 60% of the time, and my average winner is 1.13 times more than my average loser. That's it. Perfect. It stays within my backtesting results. The average risk reward is somewhere around 1. Let's say it this way. It is somewhere around 0.9 to 1. This is the good range for average risk reward. Because it depends on how on the number of the trades of actually Gottliebs versus ciphers, Gottliebs and bats versus ciphers and butterflies. I will reveal a secret that a butterfly and a cipher will have always a negative risk reward. Always. Butterfly has slightly negative, cipher has a bit more negative, a bit more, yes, a bit larger. But bat pattern, bat advanced formation is always positive risk reward, more than 1. So this means we win more than we lose, And Gartley is the transition pattern because sometimes it has less than negative, sometimes it has positive risk to reward. This is the Gartley. And your average risk to reward depends on how many ciphers you have found. If you calculate that within the 4 trading patterns, it may be the period when you only had cipher, and this makes on some pairs maybe it will give you 0.9 risk to reward or something like this. But on other pairs you have only bet, and that's why you will have more than one risk to reward. Do you follow my mind? What I mean? Or you maybe had those deep Gartley. It is absolutely random what pattern will appear. You don't know what will appear. But if you calculate the pretty large amount of pairs, pretty large amount of time frames, at least 2, 4 hour and 1 hour for swing trading, and you have found an enormous amount of patterns, like 11,000, then you can do some average calculation. What is the risk to reward on average? And with my average risk to reward, it tells me that it should stay somewhere within 0.9, 0.93. This is the true. I have it more. Well, be it. If you have more, wonderful, perfect. And my accuracy is more as well. Perfect. Why not? My results are more. Another thing that I actually think about, that why I do have real-time trading results better than backtested results, is because my experience and intuition. My backtesting was done by my robot. Yes, absolutely. We know that it is impossible to mathematically describe all the market behavior. Sometimes even a robot may lag. It is pretty common situation when it is mismatches with highs and lows, and we have to skip those situations. We only take those that are actually fit the rules. And with manual swing identification that I have, and this is the only difference that I'm using manual swing identification instead of automated swing identification. So by automated swing identification, what I mean that monster pattern search, if you go here and type the number of bars, let's say 1000 bars to this, and you enable the to true, auto scan to true, you will be given the trades automatically. A potential Gartley pattern, I didn't notice that. Perfect. Sometimes it's good to have an automatic scanner. What if price goes lower? Euro New Zealand 4 hour. Let me go back to that. I never thought of that being a Gartley. Euro New Zealand 4 hour. Okay, we need some time to load that, and until then I will show you. You see the historical, this winner, this maybe didn't trigger this bet. This, you see that butterfly? You stretch it here, and then you stretch it here, here, and it ends up a loser. So absolutely objective. If it is a loser, it is a loser. You aren't fooled yourself, showing you only winners. If the pattern completed, if the pattern didn't complete, they all are shown here. So let me disable auto scan. False. Let me go back to 50. Okay, potential Gartley formation on Euro New Zealand. Yes. Euro New Zealand potential Gartley formation. Yes. I didn't think of that from that perspective. My mind was bearish on this pair, and I never thought from the bullish perspective. That's why I have missed that. This is the shift in watching the market and seeing the markets. When you have your beliefs, the belief actually affects your perception and you don't notice something. This is very important. Perfect. Here it is. Nothing wrong with this Gatli. The Gatli is valid. According to Mannion's twin identification as well. This is the higher high. The only thing here is that maybe this C point will break A point, but if it starts moving right now, this is the Gatli that is valid. So better have this opportunity in your mind than not to have it. Better have it. Better be prepared for that. That's it. This was a vivid example of how beliefs affect the perception. How do beliefs affect the perception? From C to A. This is the Gatli pattern that I was talking about. Okay, for now it is closer to a butterfly pattern, so let first think is going to break this, but if it doesn't, we will just change our mind and draw this Gatli. Nothing wrong with that. The Gatli is perfect, it's pretty deep, the distance of stop loss is pretty small. Well, that's it. Some psychological lesson today as well. It took me almost an hour to explain that thing. We already have 7. I've did some calculations, I've did some analysis. Hope you like this video. If so, give me a thumbs up, share your experience below in comments, share this video on social media. Until then, good luck, good trading, hope to see you soon.